Hi, Harry here for the Friday, April 21st rant. A lot of things going on, obviously. I've been stressing in the newsletter in recent weeks that this bounce is getting long in the tooth. 4 to 5 months is about as long as a bounce like this goes before it turns down, and it looks like we've already probably seen the S&P 500 peak earlier in early February and the NASDAQ more recently, and they all look like they're getting ready to turn down around now. And I threw out the best pattern is the Russell 2000, the small cap index. Now, first of all, small caps tend to lead a downturn. They've already gone down as much as the NASDAQ and more than the S&P 500. And this pattern, triangle pattern, says we could bounce up to as high as 1970 to 2000 on the Russell 2000, several percent above here. But if it breaks about 1700 on the bottom side of this triangle pattern, it's toast, okay? And this thing will go down rapidly. We'll be at new lows before we know it. And my target for new lows, if we break down, would probably be around mid-June or so. So the next move is going to prove that we have seen a major top. I mean, we've already seen 38% on the NASDAQ, 28% on the S&P 500, the first crash. That is enough to clearly say the crash is very likely over. Before that, no chance almost. But this will confirm it if we can break the new lows here in the next month or two. And I think that's what we're about to see happen. And then just a summary of headlines recently in the last week or two. Probability of recession indicator going up quickly. Lending to businesses, especially small businesses, dropping fast. That's the surest sign of a recession around the corner. Business debt levels, corporate debt levels, not banks and financial companies, okay, which often can bring it up to 100%, are at the highest level at 85% and starting to turn down. Real estate rents are falling, even though prices are still kind of holding or edging up. And most important, the killer in this whole thing, foreclosures have clearly looked like they bottomed and are starting to rise. This is still in its early stages, but this is the one that will really throw us into a deeper downturn and cause housing prices accelerate downward. And they're already looking like that anyway. So again, this is the time, okay? We've had this bounce. We've confirmed 90-some% that this looks like the top of our lifetime, not just a top, but a major top. And we're now going to move into the middle of this third wave down where it really, I'm literally been saying the third wave of the third wave. So the third wave is always the strongest typically and the fastest move. And we're getting the third of the third coming in here. And so markets are likely to move fast and be down to new lows as early as mid-June. So time to make some clear decisions. If you've been on the fence about, oh, do I really get out of stocks or all of my stocks? Yes, do it now. And hey, if we're wrong about this, it should be obvious in a month or so. If we can hold here or just move sideways, that'll say we may have a sideways market for a while, which I don't like, because the markets really need to flush this out and the economy really needs to flush out these debts. But right now, all signals look like we're go for a continued downturn into the crash of a lifetime, and I will keep you updated.